I'm going to show you a simple strategy that I'm using this year to help grow my account. And I'm going to go into detail on how to find it, how to set up the plan on where you're going to stop out, where you're going to enter, and not be faked out. Let's get into it. The strategy I'm going to go into is called the breakout strategy, and it's not as simple as people say that just buy the breakout, because if you've heard that before, you probably tried it and you've probably taken a ton of losses because you've been faked out, it breaks out then fails. And how do you determine if it's an actual breakout? Well, I'm going to go into detail here, sharing my screen, illustrating what we're looking for first. And then I'm going to dive into actual charts and show you it in action, and then show you a live trade that I actually took and recorded the trade live so you can see it live, and I'll give you commentary and my thoughts and what I was thinking. Let's get started. So for the breakout, what I'm looking for is simple. I'm looking for a stock that couldn't break a prior high and it finally breaks. That is usually as far as most people go to when they're sharing the breakout strategy. And this is very frustrating because if you're a trader and you've taken this entry, there's been a lot of times where it just does that. And you want to avoid that, and you're probably asking yourself, how do I avoid all of these fake outs? This breakout strategy does not work. The breakout strategy is one of my favorites because it works, and when it does work, it works very, very well. But you have to be patient and wait for the right one. Now, what does that mean? I'm going to show you different examples here. There's one example where if it just breaks out and it's from a base, let's say this base is $1 and it breaks out $4. If that happens, that's just a straight breakout. You'd never want to enter those. Those are not real breakouts for this strategy that I'm explaining. Do not chase, do not get in, because what's going to happen more times than not, it's going to just fail. So you do not want to be that trader who gets in when who gets in right when it breaks out at any cost. Doesn't matter where it came from. You always have to ask yourself the question, where did this stock come from? Ideally, it does this. So now, let's say this is $1 and this is $1.25. Now you have a clear risk reward. You're risking 25 cents and you get in $1.25 and you can ride it up to $2, to $3. That is what you're looking for. That's one ideal setup. Now, there's a lot of times that doesn't happen where it does this, then it breaks out, and let's say it's 1 to 2. Well, that's not the best risk reward. You're going to have to risk all the way down here, and it could easily fail. It's kind of just going straight up. Instead, what you want to wait for, if it does this, is you want to wait for this instead. You want to go here, and it breaks, you want to wait for it to pull back. So when it pulls back is not where you're going to enter right away, unless you already have an idea of where you want to risk. If you know you want to risk here and it's $1 and it popped up to, let's say, $2, and this right here was $1.50, well, now you're risking 50 cents if you get in here to make 50 cents. That doesn't make sense. But let's just say it moves up here and then comes down, and this is $5 and it comes down to 2, and you want to enter here and this is $1. You're risking $1 now to make $3. This makes sense. I will take that trade. This is how it's not black and white. You have to evaluate the trade. You need to see the pattern, the breakout. Then you need to make sure the risk reward is there, meaning where am I wrong? Where am I going to stop out at? Where is my profit target? The prior highs. If that high is too close to where you're wrong and it's inverted, don't take the trade. If it's 1 to 1, don't take the trade. You need at least 2 to 1 or 3 to 1. So those are a couple of examples of what you might see. Now let's go into the chart so you can see this happen. Breakouts can be found in many time frames. In this instance, we're going to use the hourly just because it's easy to see for illustration and showing you, but there are breakouts in smaller time frames. Like as you can see here, here's a breakout here that worked very well. If you look at this area, this is a breakout for the past week. You can see that here. So you can see this in multiple time frames. How you trade it, as I explained earlier while I was illustrating, it's the same plan and how I trade it, but it's just different time frames. I just want to show you big picture these breakouts because it's easy to see on the eyes, especially when you're learning. So if you can do the higher time frames, they're also typically the stronger breakouts. That's another big tip. The higher the time frame, the stronger the move. Usually, nothing's black and white. It could easily fail. It could easily be weak. So just know you could use this on the 5 minute, 10, 15. I prefer the daily, the hourly when I'm looking for these big breakouts. So when I'm finding a breakout like this, what we're looking for is an area that's been tested at least 3 times. Here's one time here, another, and a whole consolidation. This is super important. Multiple touches is what I'm looking for. If I zoom in the 15 minute and we see the breakout, we immediately break out and then we pull back. Now this is important. When we get the pullback, I will be entering in this pullback, even though it broke out and pulled back. Why am I doing that? The reason I'm going to do that, as I explained earlier, sometimes it'll break out and pull back. One thing I didn't show you, which I'm going to show you right now, is we'll have this example where we have the breakout setting up, we break out and pull back. This right here signals that it did break out, especially if we had multiple touches. That's very important to me. If we pull back and it's coming to this risk area, still risk reward is important, and it's a good risk reward to this prior high, I'm getting in, risking this low and riding it back, because breakouts are not perfect. They don't just break out all the time and run. Sometimes they break out, look like they're going to fail, consolidate and go. You need to understand that. So getting back to this, when it breaks out, this is confirmation for me. We have good volume behind it. We're breaking out and we're pulling back into a key support area that was acting as resistance. This is very important because now I can get in this area, and have tight risk. And if I do that, this is going to change the risk reward, because now I can take profits up here. And if I get in at 197, let's say 198, and our risk prior below this wick at 197.50, that's only 50 cents risk, and it goes up to $203. That's a huge risk reward. So that is what I'm looking for. They're not always perfect. And if we continue this play and we play it out, this thing actually continues even higher. So you can actually ride this breakout even further if you want to. But the idea is look for the good risk reward. Now, if you're someone who's like, you know what, Alex, I don't want to enter here because I feel like we failed this breakout, that's fine. You don't have to. You can wait for it to reconfirm. We broke out for a second time here. And now in this pullback, you can risk here and get in here and then ride it back up. So there's many ways to play it, but you have to have the general ideas that nothing is perfect and that you have to be patient for the pullback. That's super important. The pullback is very, very important. So here's Carvana. So here's another example on Carvana. What you'll see is you will have major supply determining which way is it going to go. We choose a direction. So we have tons of supply up here, means major resistance. We get a pop-up, failed. So now we know there's a resistance area right in this area. It's very important to note. When it fails, we consolidate, come down, then push back up, and we fail again. This is key. We have multiple signals. I have a failure here, which is a supply zone. I have a failure on a touch, and I have a failure on another touch. Now I'm interested. So when we start to break out, I want to be a part of this move. Look how strong this move is. I want to take this time to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be The Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. Now, let me show you on a smaller time frame what it actually looks like. So when we zoom in on the 15-minute and we go ahead and see the action, we'll see that it breaks out right away and just goes a straight breakout, which I explained earlier. If you see a straight breakout, what do? We do not chase. So that will be very dangerous. Where are we risking? We get in here, we don't know where it's going to go, and we're going to have to risk this $10 area. So that's $2 of risk. And we zoom out on the time frame here, we're going to have to take profits at this prior support level, which is 13. So if we got in at this $12 and we're getting out 13, that's $1 upside, because we can't predict it's going to make this move. Remember, I don't want to do hindsight trading here. We cannot predict that. So we have to risk 2 to make 1. Makes no sense. So we're going to go ahead and let it go without us. And then look what happens. We get a pull back. This is what I want you to see. You get this pullback at this key breakout area. And now, what are the prior highs? This 18 level. And then we can even say the 16 support area that is now going to act as resistance. If that's the case and we get in at this $12 mark, let's just say we get in at 12. I would personally risk this prior low right here on this 15-minute candle where it wick after breaking out and pushing back down, then pushing back up. That shows me there's support there and confirmation. You zoom out, there's definitely resistance that is now acting as support. We zoom in. If you get in right here and at 12, you risk 11.50, let's say 50 cents. That's a major risk reward. If you did not risk that and you got in at 12 and you risked 10, that's still good risk reward. You're risking $2 to make 13, 14, 15, 16. That is great risk reward still. And if it continues to go to 17, 18, the higher resistance, you are in a good position. This is what I want you to see. You gotta be patient. The strongest skill in trading is patience. Patience waiting for the entry, patience waiting for the exit, patience riding the move, patience, patience, patience. patience. You have to understand that. So here's another example of the breakout. And this one is even prettier because we have multiple touches here, another touch. Then we have consolidation failing, coming back. And when we zoom in here, we have a final touch and failure. So you can wait for the breakout. You can actually put an alert here and say, when this breaks out of this area, you can actually put an alert on this line here. So when it breaks out, it alerts your phone or alerts you at your desk. So you know it is now breaking out. So we're going to go ahead and zoom in and see what happens once it starts to make its move, and it breaks out and just goes. Now, once it breaks out, it does something very nice here in the hourly. It actually held the breakout and pushed back up, which is something that's very strong because when it pulls back, you can, again, you guessed it, enter on the pullback. Once you enter on the pullback, you can ride it all the way back up. And look, it gives you another opportunity to enter again. So this is what I want you to see. Not everything is perfect when you're seeing it in a picture, but you see that there's different formations, different ways it sets up. Sometimes it is a breakout and holds right away. Sometimes it breaks out and goes without you for a while, then comes back. Sometimes it breaks out and looks like it's failing, but it's just setting up to continue the momentum at a prior resistance support zone. So you have to pay attention to this. Now, I want to show you a trade I took on NVIDIA on another breakout that actually ended up not working perfectly. And I had a great risk reward and a great trade on it because I followed my plan. And I want to explain this because you're going to be in a situation where you enter a breakout and you can still take advantage of the move, even though ultimately it fails. Let me show you how to do that. Here you'll see there's a key area of consolidation. This is a daily chart. I love daily charts. They're even stronger. And here you'll see on this day that we attempt the breakout. So we're going to go ahead and zoom in. And on this day, we're breaking out. I take advantage of this move and trade this entire move. I'm going to show you how I do that and what I'm thinking. And we're going to go live so that way you can see how it goes. So we know the breakout is at 227, right? So let's go ahead and show the live video and you'll see I'm already in the trade. I took a small position. We broke 227. We get a pullback, but I know that I'm getting in before the actual setup sets up. And here's a little bonus tip. If you watch till here, type in the comments below saying thank you for the bonus tip. If you can find confluence, another area of interest, meaning in this case, a trend line is what I'm looking for. Then you can combine the two, a trend plus a support level and a breakout, 3 areas of confluence to enter the trade successfully. When I first got in, I got in really small here and took the profits off right away because I knew I had some FOMO. Instead, I wanted to wait for some confluence because once we go straight up to the breakout, what did I say? We need to wait for a pullback to risk off a prior low. And here's the prior low, 226. So we get a pullback, pop, we get a little more confirmation, we get another pullback, pop. And if you see here, there's a trend for me. Higher, there's a trend for me. A low, a higher high, a higher low, a higher high, a higher low. So with that trend forming, I want to take advantage of that trend and the breakout. So I start to buy near the trend at 227, risking 226. We're going to go ahead and fast forward it. And you see, I just slowly start entering and I start taking profits. Where am I taking profits? Exactly where I told you guys, at the prior high. I can't predict if it's going to go higher. I can't. If you do that, you could turn a winner into a loser. You do not want to do that. So I'm taking profits at 2-to-1 already and 2.5-to-1. And then when we get another pullback, because nothing's perfect, we get another pullback. What am I doing? That might scare a lot of you, and it can. It scares me too, but I still take an entry because my plan is still intact. We have the setup still trending. This is a higher low. It should be, right? So I'm entering, still risking 226, and then we get a push back up. And I'm taking small profits because I do recognize price action. Just because we know the big picture, just because we have our setup, doesn't mean we ignore price action. If we see warning signs, like a double top here, you do not want to just ignore it, but I'm still going to trade my plan, but I'm going to take profits a little bit more carefully to protect myself. So I ended up taking some off. I took some more off. Then we get a pop back up to the high a day. I'm taking a lot off there, but my goal is to ride the breakout because we're breaking out and we're riding this trend nicely. And you can see here, these highs are also trending. So I'm seeing a channel form. So you can see here a channel forming. And this is important because whichever way it breaks on this channel is going to pick a direction. Now, we know in hindsight now, but I didn't know that in the time I was trading, but I was aware that it was channeling. And this attempt right here, when it tries again, this is a 4th time. This to me is a triple top, quadruple top. I need to be careful. I take that little position off at 228 because it's breaking a prior low, as you can see here. And it's about to break the trend, which I explained earlier, this trend. And once it breaks, what happens? We tank. So you could take the position and flip your position because it's breaking a key trend. We're reversing, we're filling the breakout now. So you could have taken advantage of that. And if you're curious on how you can short stocks, you can short stocks with many brokers. One of my favorite brokers is Cobra Trading because they have the lowest commission, the lowest borrows. And if you go through me, they give you additional 33% off for signing up through Be The Trader. It does help me out a bit, but it's going to help you out a ton. I'm telling you, this is just my personal experience. They always take care of you. You can find cheap borrows and their customer service is amazing. So you got to check them out. And they have a free demo account that you can trade on demo for free. So check them out. There are links below. Now, here's what you need to understand. You can see that even though this breakout failed, because I had a plan, because I traded it properly, because I entered near the key areas that I explained earlier, I was still able to walk away with a profit. This is trading. Trading is not perfect. Trading is not black and white. It's not perfect. It's not always going to be picture perfect. There's going to be a lot of changes because the market's constantly moving. It's constantly trading. There's tons of emotion. There's news that comes out. There's things that you didn't know was going to happen that day because something unexpectedly happened overseas and it impacted the market. You need to understand nothing's perfect. There's some cases where they can be perfect, but I'm hoping you saw all these examples and you can see that you do not have to be perfect. Don't beat yourself up and good luck.